What's your worst investment and why?
There are many worse investment because they went to zero.
Oh,
So you can't do worse than zero.
so
I have had a number of zeros. How many of them do you want me to talk about?
just advice.
Okay, so for example, in the financial crisis in 2008, I had a company I used to own, Delta Financial. They were a mortgage originator and lender. They originated, and they were actually a business that ran sensibly. They were not doing kind of strange, bad practices. But what happened is that they had these warehouse lines of credit where they will issue mortgages to a bunch of people, take on the mortgage on the balance sheet, then they would securitize it, get the money back, buy more mortgages. That was their business, right? So in the financial crisis, what happened is the securitization stopped, froze. So they were stuck with these mortgages, and then they violated the lending covenants, and they didn't have much equity. So in all of that, it collapsed to zero. And one of the things that came out of that, it was very painful because we lost $70 million. 70 million going to zero, not good. And one of the things that came out of that was I created the checklist. And one of the things I learned from the checklist is there was a single number one reason why investments don't work is leverage. So that's why I'm very skeptical about banks, financial institutions. Like I'm going to meet this housing finance company in India. I have a lot of skepticism because the equity is small and the debt is very much. They make a lot of money. It all works really well when the system is working. But when the system doesn't work, so the good news is when I meet this housing finance company, I already learned a lot of things in 2008 because I lost money, right? So this time when I meet these people, I have a long list of questions for them. Maybe questions they themselves have never thought about. Because what can happen in leverage situations is you can have extreme events. So we talked about stop loss, right? Because I have no leverage in my portfolio, I don't care how low prices go. So, for example, let's say the guy in North Korea launches a bunch of missiles. What do you think the stock markets are going to do when they open? Straight down, no floor, just falling straight down. We may be down 50%. I mean, if he actually launches and gets a hit close to a major city, maybe down 50, 60, 70%. We don't know, right? I don't have leverage. So 10% is Malta. What is the impact on Malta? Nothing. After maybe for a few days, people will bring more Malta because of the launch. But after that, the consumption will go back to normal. Okay. But the stock price will go down for sure. And I don't want it sold. I don't want a stop loss or anything. I want it sold. I want it to sit there. I want to own it. So we have to have the ability in our portfolio to have. So most businesses will not be affected long term by a missile launch, but the price will go down. What is the impact on real estate around Stanford? Unless the missile comes in there, no impact, right? Long term is the same, but instantaneously prices will go down. So we have to have the ability to take advantage of such events. More even better, not to hope it never happens. But we definitely don't want to be in a situation where when the event happens, we go to zero. Any number multiplied by zero is zero. That's the problem. So you cannot go to zero. You cannot have leverage. So one of the things I learned is that not to have leverage in my personal life and to be careful about companies which have leverage to make money. The best companies make money without leverage. So Google, no leverage makes a lot of money. Malta, no leverage makes a lot of money. So that's what you want to look for is great businesses that just crank out cash and they don't need any debt. That's a great way to go.
Thank you.
Sure.